We're going to be looking at a very interesting topic in this video, which is the audit committees and the external audit minimum standard. I am going to give you an overview of key concepts so that you can prepare this topic from this video and apply to any question in the ACCA AAA exam. And then we're going to apply those concepts to one part of the March-June 2025 exam. To give you a bit of a background, this standard has been made by the UK's Financial Reporting Council, and it focuses on how the client's audit committee needs to keep an eye on the external auditors. So this is not from the auditor's point of view, it is from the audit committee's perspective. So their responsibilities regarding the oversight of the work that external auditors do. This has been aimed primarily at larger listed companies, but smaller companies can adopt this if they want to apply good governance practices. A quick reminder from your earlier studies, please remember the audit committee should only have independent non-executive directors. There should be a minimum of 3 independent NEDs, but for smaller companies there could be 2, and at least one of these members should have recent and relevant financial expertise. So at least one person in the audit committee should have a finance and accounting background. We'll go through the key responsibilities as outlined by the standard, and you don't need to learn them. You just need to remember the key points so that you can apply them to any scenario in the AAA exam. Starting off with the first one, so when external auditors or firms also offer other services to audit clients, those approvals or those permissions basically need to come from the audit committee. So the audit committee has to oversee and control any non-audit work given to audit firms. They can then make sure that the external auditor's independence is not compromised. They're going to lead the tendering process even for the external audit engagements, and they will recommend auditor appointments and removals. Please remember the final legal approval stays with the shareholders, but the recommendation regarding appointment, removal, remuneration, etc. comes from the audit committee. So the third part covers the remuneration element. They are the ones who are going to approve the audit fee and the engagement terms. They need to make sure that external auditors do have unrestricted access to all information and personnel. Remember, from an external auditor's point of view, this is a precondition of audit, but we are talking about a separate standard which talks about audit committee's responsibilities. So during the audit, if external auditors are not being able to access any information, it is the audit committee's responsibility to sort this out for them. Very important, they should encourage constructive challenge from the auditor, and they have to make sure that feedback that the auditors give is acted upon in the financial statements. So they do actually encourage that auditors challenge things like judgments, estimation, etc. And whatever feedback that they obtain, they need to work on this. And this is primarily why you would need someone from an accountancy and finance background to have that relevant knowledge. They need to keep an eye on the auditor's independence and objectivity. So if you remember when you were preparing for your ethical issues from the Code of Ethics, a lot of times the recommendation was this needs to be discussed with the clients, those charged with governance, which could be the audit committee. So the other part of this is, again, the audit committee's responsibility that they need to monitor, and if there's any indication that their objectivity is compromised, then remember they would actually go back and recommend the removal of those external audit firms. They need to assess the quality and effectiveness of external audit, and we're going to talk about this a bit more in the next slide. And this is where most of your application is going to come, so we'll just put that aside for now. They also have to devise, oversee, and apply the company's policy on non-audit services provided by the external auditors. So they need to have a policy which either allows or does not allow certain services to be given to the existing current auditors. And finally, they need to report to the board and shareholders on how they have fulfilled their responsibilities regarding keeping an eye on external auditors. So these are the 9 points that you need to keep in mind. And as is the case with all AAA questions, you will need to apply them to a scenario that we will be doing so later. We just need to talk a bit more about how they have to assess the effectiveness of the external audit process itself. Let's look at what we mean by evaluating external audit quality. Please remember, this is again guidance given by the standard. Now, the audit committee needs to assess the scope and resourcing of audit and keep an eye on how the firm or the auditor has handled key audit risks. So as a part of this, they're going to ask the auditors to outline the key audit risks that were identified and how these have been managed. So for example, if the auditors have identified impairment of plant and machinery as a key audit risk, they need to tell those charged with governance or the audit committee the further procedures that were designed around this area. So what were the risks and how were these managed? This is the information that the audit committee should ask the auditors to share with them. They should also review the audit plan, whether it was being followed, and if not, the changes, the reasons for any changes. Now, please remember, we're not saying that the audit plan cannot be changed. As you progress through the audit, if new risks are found, your plan would change, your materiality would be revised, etc. It's just that the audit committee needs to find out why there were changes. They need to gather feedback on audit performance from senior management and the internal audit function if they have one. They should also examine the auditor's management letter. Now remember, this is basically a letter through which they might be communicating significant deficiencies in internal controls, etc. So auditor's management letter is the auditor's communication with the client, or basically letters addressed to those charged with governance. Now, they need to evaluate whether the letter reflects a sound understanding of the business. So, have the auditors really understood the business? And any recommendations that were given by the external auditors, were they actually acted upon? So this is basically what we mean by evaluating external audit quality. Let's not get confused. We're still talking about how the audit committee needs to make sure that external audit work has been done up to a certain standard. And finally, we spoke about this briefly. The audit committees also need to make sure that they report in the annual report how they have discharged their responsibilities regarding their oversight of external audit work. So up till now, we've really just covered the knowledge aspect of the responsibilities that audit committees have. We can now apply them to a scenario from a AAA pass exam. This is an extract from the March-June 2025 exam. I'm calling this an extract because we're not covering Exhibit 1 or the first requirement, which was about a decision whether we should continue with this client. We're just focusing on the second part, which is a good 10 marks about the standard that we've just covered. So you could just always pause the video here and read through this information in your own time. You're an audit manager. You're responsible for the audit of a group, which is an existing client. It is a large retailer and it is listed on the stock exchange. Now, the group has recently acquired a financial services company. So from a retailer to a financial services company, different activities in the country of Farland, so another country. The directors are quite enthusiastic about the acquisition as they believe it will help encourage sales of the group's more expensive retail products, which have been harder to sell in the last 6 months due to economic pressure and new market entrants. Now, again, there's been some information given, and as I'm reading this for the very first time, all I've picked up as of now is that this company could potentially be facing some liquidity issues. We're not saying it's shutting down, just that they could be facing some cash flow issues. We're leaving Exhibit 1 for this video because that related to another part. We're just going to focus on Exhibit 2, which is basically file notes of on-site audit work, which provides details of audit matters which have been brought to your attention by the audit supervisor. The requirement that we are covering is on the screen right now. So following detailed consideration, the firm has determined that it was appropriate to continue with this audit. It is now the 1st of September, so from 1st July to September, and the audit work of the group has been completed. So the report has not yet been signed, but the audit report has been, the audit work has been completed. The requirement is using Exhibit 2, discuss the matters which should have been considered by the audit committee in contributing to audit quality. For 10 marks and some additional professional skills marks, we need to read the information that is given and evaluate if the audit committee has fulfilled its responsibilities regarding the oversight of external auditors' work. So whatever we've just learned, we need to now try and apply this to the scenario given. All right, so starting off with something called the legal claim. The group has been involved in a legal claim against the group from a competitor because of a breach of copyright laws. The director has assured the firm that the claim, which relates to a product with a material revenue stream, is very unlikely to be successful. However, the audit team has not been permitted to examine any legal correspondence regarding the claim. Now, I'm just going to stop here for a second and make sure I've understood what's happened. There was a claim, so we're looking at IS 37. The director thinks it's going to be unsuccessful, so they've done nothing. But as auditors, we were meant to confirm the probability, possibility, etc. But we were not given access to legal correspondence. So there is management bias because they might be trying to hide provisions and expenses, and there is a scope limitation. So remember, this is not a risk question. This is not a procedures question. I need to focus on what the audit committee should have done faced with these circumstances. That's what we need to focus on. Then the second one, during the audit, the group audit team found that the new subsidiary holds a large amount of crypto coin. The audit committee knows that Fairfax & Co., the component auditor, has challenged management on this accounting treatment, but no further action was taken. So the group audit team has knowledge that there were concerns regarding the accounting treatment of crypto coin, which could potentially require a lot of judgment. I need to be clear that there's no standard around the accounting of crypto coin at the moment. So this is going to be a problematic area. So keep thinking, I need to link this to what the audit committee should have done in this situation. The fact that the auditors have nicely let this go, was this something that the audit committee should have taken action on? At 31st of July, the value was 9.4 million. However, this has fluctuated by -10 to +15% throughout the month of the ownership of the finances co, the Como Finances Co. So not only is this an area where there's no accounting treatment and there's a bit of judgment, there has been a lot of volatility, which makes this all the more a bigger problem or a bigger risk. So keep that in mind. In all this situation, we have to talk about what the audit committee should have done. The group finance director stated that the assets should be classified as cash because it is a form of digital currency. The accepted accounting treatment is for it to be classified as intangible assets. So there's no standard, but there is an acceptable accounting treatment which has not been followed. So there's a misstatement. Como Finances does not trade crypto coin, and the audit committee reviews the overall liquidity of the group as a key risk area. So we were already concerned about liquidity. I should now be more concerned about the fact that there could be a lot of manipulation, particularly because liquidity is a key area. So this is basically the background information given about what has actually happened. Now, what has the audit committee done? The group audit team had received no response to the audit plan following its communication with the committee before the commencement of audit work. So remember, they were meant to review the plan, etc. None of that happened. The original audit plan was submitted before the acquisition of Como Finances, and therefore no audit work was planned on the cryptocoin assets. Now remember, this is what we spoke about. If new circumstances arise, if new risks arise, you need to revise that plan and of course incorporate more audit work. So there was no consideration of new risks on audit work. This is basically negligence from the auditor's perspective, but we are focusing on what the audit committee has should have done. So they didn't actually follow up on this either. The audit committee did not inform the auditors of the acquisition before the audit work started on site. As a result of this omission, the audit team had to revise the initial plan quite quickly to carry out the audit work on currency. So again, this quick work is going to impact audit quality, and this is something that is a result of miscommunication from the audit committee's perspective. Please make extensive use of the highlight function in your exam so that you don't lose out on easy marks. So keep highlighting information that you've picked up. So we have further information given. This is related to last year's report to management. The audit of the group for last year revealed a cybersecurity breach where personal data of customers was stolen. The firm had recommended in last year's report to management, which was addressed to the audit committee, that the group should review and update security controls for the customer database. During the audit for this current year, it was noted that no improvements had been made in respect of these controls. However, no material cybersecurity breach was found this year. So again, as a part of my responsibilities as the audit committee, I should have made sure that the auditor's recommendations were actioned from last year, but that has not happened. So as I read this information, it's very easy to get confused about talking about this from the auditor's perspective. Please remember, it is not. The requirement asks you to talk about how the audit committee has not fulfilled their responsibility regarding the oversight of external audit work. We can now start writing our answer. So I've given like a heading from the examiner's marking scheme and of course a bit of an explanation. This is a lot more than 10 marks. We are looking for some professional skills marks, but this is a comprehensive discussion that could help you in other questions that may come up. So starting off with the first one, let's start off with my easy mark by talking about the accounting treatment for a provision, because we have picked up that that's an issue. So explain present obligation, past event, probable payment and amount can be measured reliably. This is when a provision should be booked. Now, as auditors, we know that the legal case is a present obligation because of a past event, but because I did not have access to information, I can't say whether the payment is probable or if an amount can be estimated reliably. The refusal of the finance director to let them access information is quite suspicious because the director might have information that they're trying to hold, which is basically an indication of management bias. So we are building our case for saying why the audit committee should have intervened. This is the case with all questions in AAA. We don't just quickly say for 1 mark, oh, they should have done this. We need to give the background information for all of this. So 3 marks out of 10 really for building that case. We're now ready to talk about how the audit committee has not fulfilled its responsibilities. So basically, they were not there to make sure that auditors do have access to information that they need, and they were not there to get involved when the director did not give them that information. So they've not made sure that the management are fulfilling their responsibilities by giving information to the auditors. And because of that, audit quality has or will be deteriorated because auditors were not able to get appropriate evidence about a potentially material double entry or disclosure in the financial statements. So basically, how has audit quality been affected? Because there could be a double entry or a disclosure which is missing. And for part B, again, we're linking this to how the audit committee did not make sure that this misstatement was avoided. Moving on to the accounting treatment of CryptoCoin, we get 1 mark for saying that there's no specific standard, therefore there's a lot of judgment involved, so there's no accounting standard. We need to talk about the fact that there is an acceptable accounting treatment, which is it should be recorded as an intangible asset, and therefore recording this as cash is incorrect. So similar to what we did earlier, we're building up our case. Previously it was IS 37. This time around, it's an acceptable accounting treatment for something that doesn't have an accounting standard yet. So the audit committee in this regard should look for occasions where the auditors have challenged management and the result of these challenges, and therefore it is quite worrying that no further action was taken by the audit committee regarding this matter. So the auditors did not challenge management and the audit committee did not evaluate that this was happening. Just before we talk about what the audit committee has not done, we can get an additional mark for talking about the fact that there's a high degree of volatility of the currency because of that movement within 1 month, which means this is a bigger risk. And based on all of this information, I have 2 concerns which indicate that audit quality was not monitored. The first one was the difference in accounting judgment of the finance director and the audit team. And the second one was the fact that the audit team had to improvise quickly on finding out about the crypto coin during the audit work, and they did not have proper time to carry out the audit procedures, which means that the quality of audit work has been compromised. We can get more marks by talking about management bias once again. So the provision one was separate. This is linked to another area. Remember, instead of booking this as an intangible asset, which is the acceptable way of doing this, if they record this as cash instead, their liquidity ratios would be manipulated. And that's why they are insisting, the director is insisting that this be recorded as cash. So identify that as a point that can be linked to management bias. Getting some additional easy marks, we get a mark for saying that there should be regular communication between the audit committee and the auditors, and that does not seem to have happened. There was no response by the audit committee to the audit plan. There was no communication after the acquisition. There was no consideration of the wider impacts of the acquisition of Como Finances and the use of a component auditor. Remember, from an external auditor's perspective, the use of the work of a component auditor increases risk, and then again, like a circle, it affects my plan, risks further work, etc. So because that communication did not happen on a timely basis, all of that work would have been or has been affected. The audit committee needs to report on how proper oversight of the financial reporting processes has been achieved throughout the year. That's a part of their responsibilities. And they cannot demonstrate this because there has been a clear lack of communication throughout the year. The audit committee is also responsible for monitoring external auditors' reports to the management and whether those recommendations have been actioned, and they haven't done it. So we're talking about what should have been done and then an application, what should have been done and then an application. Now, there was a report last year regarding the cybersecurity breach and recommendations regarding systems that needed to be improved, but this was not acted upon. So basically, with regards to the communication, we can end this by saying that they have not been effective in utilizing the recommendations to improve group internal controls, and this could have a wider impact on the rest of the controls as well. So just to quickly wrap up, the only thing that you need to keep in mind is as I answer my questions, it is pretty much the same format, right? We start talking about what should have happened, but then we need to end up linking it to how the audit committee has not fulfilled its responsibilities regarding this particular scenario.